I'm here to tell you today, buy every share in sight of both of these stocks for the next 3 to 6 months. Every single week, these stocks are a buy. And I'm going to explain in this video here today why these stocks are a buy. We'll go into detail in regards to these and why these should be bought every single week. Celsius. Whoo, baby, this one's getting interesting fast. Okay, so here's what's going on. Okay, this came out yesterday. Winners and losers from Piper Sandler's latest survey on teenagers. You may say, okay, why does a survey of teenagers matter? It matters significantly. The brands that many times you think are cool when you're a teen, many times you carry that through to your 20s and your 30s and so on and so forth. And if I think about myself, many of the brands that I thought were very cool as a teen, I still think are cool today, right? And many of those brands I still shop with, many of those places I still like, right? Not all of them, but many of them I do. So it's a very important survey that's always done by Piper Sandler every year. And it usually comes out kind of around this time of year as far as the report. So right off the bat here, Nike and Elf Beauty, two companies I own, this is I like. Nike and Elf Beauty were noted to continue to prove their wallet dominance as #1 preference in apparel and beauty. Nike holds strong as the #1 brand for all teens in apparel and footwear. That bodes very good for Nike, right? New Balance improved to the #3 spot, doubling its mind share. So good for New Balance there, but I definitely like that Nike's still the big dog in the space, even with teens, right? In apparel, Lululemon kept its #3 ranking, but lost 4 points of mind share among upper income teens. Not great news for Lulu there. In e-commerce, Amazon ranks #1 again among upper income teens as a top shopping website. Doesn't come as a surprise to me. The beauty category was noted to remain a high priority for teens. The fall survey showed the core beauty wallet reaching its highest level since 2018 at $342, which could be a positive for Ulta Beauty and Elf Beauty. TikTok reported as a favorite social media app among teens, which that doesn't surprise me at all. Instagram came in second, Snapchat came in third. As expected, Netflix was a top choice for teens as it relates to daily video consumption. As for trends overall, Piper Sandler sees the results positive for the teen survey for Meta platforms, Roblox, Uber, Pinterest, and DoorDash. The breakdown of teen preference was mixed for Amazon, Google McDougal, and Snapchat. Chick-fil-A continues to remain the preferred restaurant chain for teens, followed by McDonald's and Chipotle. But here's where it comes in for Celsius. Teens prefer energy drinks over coffee and soda as our top source of energy. Monster Beverage, Red Bull, and Celsius held down the top 4 spots again and collectively gained mind share over Starbucks. So bearish Starbucks, bullish energy drinks. Also bearish soda, right? A lot of the younger generation, they're just not interested in soda for the most part, right? Which is interesting, which might be good for them. But then again, energy drinks aren't always the best for you either. So, I don't know. You trade one for the other, right? But the moral of the story is this is definitely bullish for Celsius here in regards to survey. But then this came out here today. Energy Jolt. Celsius Holdings and Monster Beverage gain after trade show buzz. Celsius broke higher on Thursday after Stifel pointed to some positive developments from the National Association of Convenience Stores trade show today. The analyst said conversations with brand owners and retailers at the convention were more upbeat in tone on the potential for convenience store category sales to improve in 2025. Now, here's the deal, okay? A couple things in regards to this. Convenience store sales haven't been the best in the past, really, year. And I came from the convenience store industry, right? I used to be a manager in that industry for 4 years. And I know where we built our stores, and I know where our stores made the most money, and I know what our customer bases were like, okay? We didn't usually build our stores in wealthy areas. We usually built many of our stores in, let's call it, middle-class areas or below middle-class areas. And the reason being is a lot of your customer base in convenience stores, they go in there, okay? When you're talking about higher income, a lot of those folks look at going to a convenience store as kind of like a waste of money, right? They kind of think like, I'm buying everything at Sam's Club, I'm buying everything at Costco, I'm buying in bulk. I'm not going to buy individual products. I'm not going to go buy a Celsius in individual. I'm going to buy a case at Costco or something like that, right? And so think about the folks that have been hurt the worst by inflation in 2022, 2023. And then we've really seen the effects of that negativity, obviously, in 2024, right? who's affected the most? Obviously the bottom 50-60% of income earners. And so that's like the portion of convenience store shoppers. Like that's the heavy portion of convenience store shoppers. Because a lot of people, like I said, of upper incomes, they never even go to a convenience store. Like it's a rarity they ever go to a convenience store and go in there and go shopping and get this and that, right? And so if sales are going to come back there, if that consumer is going to be stronger, then obviously convenience stores are going to be feeling pretty good about their business for 2025. Now, here's the thing, okay? Very important. Who the heck cares if sales are bad or good or not good in one quarter or 1 year versus another year in this channel, right? As a long-term investor, these companies, it's all going to be irrelevant in the end, right? They mentioned here about, obviously the hurricane, and that could maybe potentially affect sales negatively, right? Like, all this stuff is just like, it's here today, gone tomorrow. Like as a long-term investor, it cracks me up that people get so crazy over this and they want to bid the stock up 20% in 2 days based upon a couple pieces that I don't even think this is surprising. Is it surprising to me that teens prefer energy drinks over soda and coffee? No, that's not is that shocking news? Like this should not be shocking news to anybody, just to be quite frank. And then, the folks feeling better about the convenience store? No, if you understand that finally the bottom 60% of income earners finally is not being sliced and diced by inflation for once, that's going to bode well for that consumer base in 2025. And, this isn't rocket science in my personal opinion, but people make such big judgments over this short-term stuff. And as a long-term investor, you just got to sit back and say, you guys can go all crazy about this, sell the stock off 60-70%, then bid it up 20% in 2 days. Like, what is going on here? Because people freak out and go all crazy about the short-term stuff. Now, when it comes to Celsius, here's the deal. 2-year forward P on this one, 21. Next year earnings per share growth should be good. Revenue should be good. It's just a question of like how good are we talking in regards to Celsius. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it. Why is Celsius stock and ELF stock a buy? Every dip in these stocks is a buy for the next 3 to 6 months. Here's why. So, where I'm starting out here today, 1000xstocks.com. We have a little hidden feature that not a lot of people know about. They know about the search, the compare, earnings calls, SEC filings, the valuation tool gets used a lot, the financials, the charts, but there's a little thing down here that can be very helpful. It's called the education section. And this goes into a bunch of different things on how to do it, how to decode a balance sheet, income statement, cash flow, strong moats versus weak moats. It goes through examples of different companies, right? How to value a dividend stock, how to value a growth stock, dividend investing, portfolio management. But I want to focus in on this section right here. We have this one, which is called How to Perform SWOT Analysis. It goes very in-depth on SWOT analysis and gives some real-life examples, right? But I thought we'd perform SWOT analysis on both of these companies. So here's ELF's SWOT analysis here. When it comes to the S, that's strengths, weaknesses is the W, opportunities is the O, and threats is the T. Okay, and this is something you'll learn in pretty much like a business 101, right? They might not give you the best examples, always a SWOT analysis, but you'll learn this in very early on business classes in college. I remember pretty much being a freshman in college and learning about SWOT analysis. ELF. The strengths when it comes to ELF is their brand. Their brand is I think, the most successful brand on social media. What they've done with this brand in making them super successful on Instagram and TikTok and YouTube is absolutely something that should be studied by brands for in the future. It is incredible. And another strength for this company is their product and their price. They have a very good product that's at a very compelling price points. If you look at most of Elf price points, I mean, most of their products are under $15 and a lot of them are under $10. It's affordable to the masses. It doesn't matter if you make $40,000 a year, if $20,000 a year, if you're a college student, it doesn't matter if you're a multimillionaire, like everybody can afford Elf's products, which is huge. Another thing I would look at as a big strength for Elf is their CEO, Tarang. Absolutely unbelievable job he's done with this company over the last number of years. He's the most successful person in the cosmetics industry over the past 5 or 6 years. And it is really not, it's him and then it's everybody else in this industry. It's unbelievable the job he's done. Stealing market share from competitors, building up this brand to be such a successful brand on social media. It's incredible what he's pulled off. So I would say he's definitely a massive asset to that company, and he's still actually relatively young in regards to CEO terms. So if he wanted to lead Elf for the next decade, he easily could. Another strength I would say with Elf is they're very successful online. When I say online, I'm talking about their actual Elf cosmetic store. A lot of people shop directly through Elf's website. What's so important about people shopping direct through Elf's website? There's a few things. One is, then Elf can control their customer, right? They can market to their customer, send marketing messages, let them know about future products and launches and those sorts of things, right? Additionally, guess what? You're likely going to make way more margin than if somebody bought that same exact item from Target or from Walmart or from Amazon, right? Because Elf, let's say there's something that's a $5 product, right? Well, if Elf sells that product into Target, Elf might only make $3 off that, and then Target makes $2 off that item, right? Versus, let's say Elf sells that same $5 item direct through their website. Well, now we're talking about they make all that additional margin rather than Target makes that additional margin, right? So that's huge. Additionally, you've got to be very successful online nowadays. You can't get around it. Like, so many shoppers are buying online, especially when it comes to newer generations, Gen Z, obviously my generation, the millennials, and then you could go into Gen Alpha. Are you kidding me? Like, I don't even know how much those folks will shop in the stores, right? They're going to be extremely, extremely heavy when it comes to digital first. And so you've got to be in those places. You've got to be on Amazon. You've got to be huge. You've got to have your own successful website. Now, additionally, this is very important. It's not just that they have that online position. Now they've built a massive offline position. So go into your local Target store, go into Walmart, and you're going to see likely huge sections of Elf now at this point in time. Go into Ulta Beauty, massive sections for Elf. And so now this company is successful not only online, but offline as well. If I think about kind of weaknesses for the company, I would say since so many of their products are made in China, if there's any sort of other big tariffs that are put on, right, that could potentially hurt Elf's business models, no doubt about it. Now, if we're thinking about opportunities here, there's shelf space opportunity for Elf to continue to expand shelf space because they sell through so phenomenal. When you sell through at such a high rate, basically your retailers, Target, Walmart, all these other guys, Ulta Beauty, they're basically incentivized to allocate you more and more shelf space because you move product and they're in the business of making money. So they want to make as much money as possible. Additionally, I would look at it as an opportunity as international expansion for Elf. Elf is still heavy US, but because they're so successful online, right? On Instagram, on TikTok, on YouTube, this gives them more of a global reach. And so Elf can go into a new market and be successful almost from day one because the Gen Z folks, the millennials, the Gen Alphas, they already know of Elf's brand because they've seen it on TikTok, they've seen it on Instagram, they've seen it on YouTube. They want the product. And so when Elf goes in that new market, they already got a customer base that exists. It's not like people have never heard of the brand before. So the international opportunity over this next 5 years specifically is unbelievably huge for Elf. And honestly, the international business should dwarf the USA business, which, keep in mind, today, the USA business is gargantuan compared to the international business. Over the next 5 to 7 years, that should flip. There's way more humans outside of the United States of America to buy Elf's products than inside the United States of America. And because their products are so affordable, the international opportunity is ridiculous, okay? Additionally, Elf has room to move up price points. Because their price points are so affordable, if they move price point up 50 cents, a dollar, it's not going to change the game in regards to people saying, I'm not buying ELF. But what it will do is going to make ELF's margins go up considerably and their profitability go up considerably just by going up 50 cents or a dollar on items. It's a game changer for the company. Now, if I think about a threat, I don't think there's a lot of serious competitive threats out there for ELF, but I do think a threat is Estee Lauder's looking for a new CEO, EL stock, right? Another company I bought here recently. And they're looking for a CEO, and like, what if they took Terang away? I'm the only one that's been talking about this as a risk factor, and I do think it's a risk factor because if Terang got stolen away by Estee Lauder, it would be a huge loss. It does not mean ELF is doomed, but we need Terang leading this company if we really wanted to maximize the potential here. So that's a threat that I think that has to be considered here. But you can see like there's a lot of strengths and a lot of opportunities for this company. Celsius. Loyal core customer base. That's a huge strength for them. They got a very loyal customer base that drinks 2 of those Celsius every single day, right? Customers view Celsius also very different than they view like Monster, very different than they view Red Bull. They view Monster and Red Bull as kind of those traditional energy drinks, like you're going out for the night to party, you're going to drink that, or you got a shift at work. Maybe you drink Monster or Red Bull. Customers view Celsius in a different light, and they view it as a better product for you and for your body than Monster Red Bull. I'm not here to debate whether that's true or not. I'm just here to tell you how a lot of people view this, right? And another strength, I think, is they have big ties to athletics. They sponsor a lot of athletes. And through those sponsorships, I think gives them a lot of not just brand awareness for Celsius, but additionally, it allows a company to kind of be seen as like, all these great athletes are drinking your product, so why can't you drink that product when you go to the gym? Which I think is kind of genius, right? It's taking a playbook, it's taking a play out of the playbook of what company am I thinking of right now? Nike, right? Nike, they sponsor the greatest athletes in the world. They have them wear their products, they run commercials on them, and they associate with success, right? And so that's some pretty strong strengths there when it comes to Celsius. Now, as far as weakness, international business is certainly a weakness for Celsius as of right now. It is an opportunity as well, but it is a weakness for the company as of right now. A lot of these big drink companies are massive all over the world. Celsius is not yet, right? They haven't been established for a long time as a big dog company. Remember, Celsius 5 years ago, which is a very niche brand. Hardly anybody even heard of Celsius. Now, you go into any local grocery store, all these big box stores, there's Celsius product on the shelf, right? And so we haven't really seen Celsius go through the ups and downs of the market, and we're going to see that over this next year, right? Which is going to be very interesting to see how they handle that. But I would say as of right now, it's a weakness for the company. As far as opportunities, listen, they got a lot more stores to get into. They got a lot more doors. They got a lot more shelf space when it comes to Celsius. So just in the United States of America, we're not even talking about international yet. Just in the United States of America, a lot more stores, a lot more retailers to get into, and a lot more shelf space to capture in the USA. Additionally, international is like I said, like international could be a bigger business for Celsius and should be a bigger business for Celsius long term than the USA business, right? I mean, when you're talking about a drink company, it's a lot more people to drink your product outside of the United States than in the United States, right? Additionally, when we think about Celsius, they're honestly in a position to continue to steal market share, which they've done a great job of. They can steal that market share from a few different places. They can steal it from kind of the traditional energy drink companies. They can steal it from soda companies and take market share that way. And additionally, they can just add new customer base as well, right? Now, as far as threats, there's one core threat always for a company like Celsius, and it is the Monster. Monster, absolutely. Monster's a stock I owned many, many years ago. I just started buying the stock here recently as kind of a hedge, just in case I'm wrong on Celsius. Monster is a serious competitive threat. A serious competitive threat. They will do everything to fight off their competition. I mean, Bang Energy was a main competitor for a while. Monster took them to court, won cases, and then bought Bang out. Now Bang Energy is owned by Monster. It's unbelievable. They are a brutal competitor to mess with. I'm just telling you that, right? And keep in mind, Monster stock has gone up 75,000%. 75,000% over that time. Whew. And much of those gains have really come in the past 20 to 25 years. Here's the deal. You don't get your stock price up 75,000% unless you are a ruthless, serious competitor. There's no other way around it, okay? There's no other way around it. Here looking at 1000X stockholder equity for ELF, all-time highs. I mean, the balance sheet's in a phenomenal position for ELF. When it comes to Celsius, look at that shareholder equity. It's gone to the moon. And Celsius is in, keep in mind, these are smaller market cap companies. These are less than $10 billion market caps here. And so their balance sheets are in a phenomenal position. Their shareholder equity is looking great on these companies. So that gives me a great peace of mind that, okay, let's say, the revenue's slow for the next, 6 months, 12 months. It's fine. It's not like these companies are like a bankruptcy risk and it's like, oh my gosh, their balance sheet's so bad. Like if they, numbers weren't quite there, they're in big trouble. Like, no, these companies are in great financial position and great financial standings. Additionally, look at Celsius's trailing 12-month revenue. Is that not the most beautiful chart you've seen? I mean, look at that. Look at that. That's beautiful, okay? Beautiful. That's what I want to see out of a company. Phenomenal. Now, in regards to Celsius, here's the problem. Short-term dips expected, right? Analysts are expecting the next quarter or two to be very weak as far as, Celsius numbers. But why is this? Is it just like people stop buying Celsius or something like that? No. Here's what's actually going on in regards to Celsius. They got a big Pepsi distribution deal in this that kind of really started to roll through in the second half of 2022, right? And so 2023, there was this massive, epic kind of, let's call it product moving into Pepsi's hands to distribute Celsius product all throughout the United States and maybe even take them international, right? Which is great news for Celsius. They need a distribution partner like that because Celsius can't really build that themselves. Like that's so costly, it's ridiculous. So you need to partner either with Pepsi or you need to partner with who? Coca-Cola. Coca-Cola might not be as interested in partnering with Celsius, and here's why. Coca-Cola nowadays owns a substantial portion of Monster Corporation, Monster Energy. So Coca-Cola isn't as incentivized to distribute Celsius all over the place if it is seen as Celsius potentially taking market share from Monster, right? But Pepsi, on the other hand, they don't have any really truly super successful brands that they own. So Pepsi now owns a portion of Celsius, right? And Pepsi's able to distribute that. But the issue is, in 2024, Pepsi's cutting back on a lot of inventory. And they're changing their systems to run inventory much more lean when it comes to Pepsi distribution, which is great news for Pepsi long term because you don't want to have excess inventory just laying in warehouses. That's money, right? That's money. But for 2024 numbers here in the second half, it's bad news for Celsius short-term numbers. Because you kind of got to work through a bunch of inventory. Pepsi's going to run really lean, and then we can worry about sell-in coming back through in 2025 for Celsius, right? But at the end of the day, like this is just short-term mumbo-jumbo. Who cares? Who cares? Like, all I care about is that Celsius's brand and revenue is going to grow massively over the next 3 years, 5 years, 7 years, 10 years. Whatever happens in the short-term next 2, 3, 4 quarters, to me it's irrelevant, especially when it's not a customer related thing. It's more of a Pepsi related thing more than anything, right? Now, when it comes to ELF, look at this. Is this not epic? Look at the trailing 12-month revenue for ELF. It is incredible. And on a company that's market cap is less than $6 billion right now, right? But next 4 quarters are expected to not be all that exciting for ELF, right? This is the quarter we just had through in regards to trailing 12 month, and these are the kind of quarters we're going into, right? And so now everybody's freaking out about ELF, like growth rates aren't going to be that exciting, this and that, right? Even if their growth rates were slower over the next few quarters, at the end of the day, I just so confident this company is going to be able to increase their revenues and profits so dramatically from here over this next 5-10 years that whatever happens in the next few quarters, who even cares? But with that being said, I don't think analysts are right. I don't think they're right. With their pessimistic revenue numbers here, I think they're wrong. Big time wrong. Here's why. ELF has beat 14 straight quarters. And when I say beat, I'm talking double beat. They beat on earnings per share and revenue 14 straight quarters. You're going to tell me that's a company you want to bet against? I don't think so. I want to be on their team. I don't want to be against them. I want to be on their team. That's incredible, right? And so with these analysts being so pessimistic on numbers, what do you think the higher probability is here? Do you think the higher probability is these analysts are right And next thing you know, Elf's numbers are just crap the next 4 quarters? Or do you think maybe over the next 4 quarters, Elf's going to come in and double beat, double beat, double beat, and double beat? I'm going to go on the side of Elf. I think Elf's probably going to come in and double beat quarter after quarter after quarter for many quarters. Could be wrong, but I'm willing to take that risk.